That rand trading a little bit weaker this morning, 674, 675, but it looks like some softness also creeping through to the euro after the ECB's rates announcement yesterday.
Yes, yesterday we saw the rand trading in a very narrow range, despite the fact that we saw an improved dollar. There was also some disappointing manufacturing data and some scathing remarks about South Africa's fiscal position by Moody's. And even though the ECB indicated yesterday that there's a possibility or a higher probability of a rate hike at the July MPC meeting, the dollar really enjoyed broad-based short covering as participants are really of the opinion that the 25% basis points increase could possibly be the last one. The dollar bulls were also benefited from bargain hunting on Wall Street last night. But we do see that the bleak manufacturing data yesterday does pose a risk for the rand from both a balance of payment perspective as well as a GDP differential perspective.
Well, let's look at that manufacturing number because it was up just 0.4% year on year from April. That was from a revised 4.6% in March. And if you look back to the first quarter, the manufacturing sector really driving growth here in South Africa. Do you think it was just seasonal factors, Easter holidays and the likes that led to that sharp fall off in April?
There could have been seasonal factors that have impacted that number of 0.4%, but we also saw, if you look back at the PMI numbers of the past couple of months, we saw the PMI moderate a few times. We're also seeing the business activity and the new sales orders of that PMI indicator also moderate, and the employment sub-index is not really making any gains as well. In fact, it is below the 50 benchmark level. So there have been indications that the manufacturing sector would come off, and the South African manufacturing sector is really attaching to the global trend. The PMIs out of the US and the UK and the ECB, the European Union as well, so also have been moderating over the past couple of weeks. So it's really attaching to global trends at this point.
Do you see any scope for improvements in the manufacturing sector, or do you think we are seeing a decline here in activity as the year progresses?
No, we do expect a recovery in the manufacturing sector on the back of improved domestic demand. However, the second quarter rather is likely to be impacted by lower demand from retail sales, from the wholesale trade perspective, and vehicle sales as well. If you recall, last week we saw the vehicle sales number come in a lot softer than what was expected. We saw an increase of about 6.1%, whereas we had expected trading conditions to normalize. But that has really been indicated, or rather impacted, by softer demand. We do expect that demand to have improved towards the third and fourth quarters of this year.
Of course, while we had manufacturing disappointing yesterday, mining figures coming back quite nicely, so perhaps offsetting that disappointment a little bit.
Yes, indeed, it did offset it slightly, but we saw an increase of about 12.4% in the mining numbers from a very low number the previous month. Well, the numbers was impacted rather by higher gold and platinum prices during the month. So we do expect a continued moderate increases in mining production as we move forward.
Shireen, range for the rand as we head into the weekend, what would you expect for the currency?
Well, the rand has really been stuck in a range of about 666 to 682, but with very little data coming out that could influence the currency, there could possibly be a breakout of that, whether it's from the 666 side or 682 side. If it does breach the 666 to the downside, we could see it test towards 654. However, if it's on the 682 side, we could see it move closer towards 685, 690.